Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of indices. My name is Vic. Thanks for joining me here. We'll be covering DXY, Dollar Strength Index, and we'll be covering a few major indices such as Dow Jones, SnP500, NASDAQ, and probably UK 100, which is FTSE. So let's start with dollar index. And now majority of bloggers and media outlets and even market gurus, they are waking up to this fact that the dollar is has started to rise, and we have been following this and we have been analyzing and saying about this for a long period of time. If you have been following my analysis, remember since last year I've been saying that the dollar was going to rise from this level. It rose, fell down, which was expected because there was enough bearish momentum, and then formed a double bottom, pretty much like what it did on gold, and then started to rise. So this is going to continue until it reaches the mid of this channel, which is going to be near about 94 to 95 or something like that. We'll have to see depending on how the market moves. Then I'll be able to give you a better insight into where market is going to go to. Okay, so this is what we are looking that overall, on multi-month basis, the dollar is still bullish and it can continue to go up. As you can see, there is a W pattern forming here, and this can actually push the price to near about 95 area or so. So this is quite possible, but let's go and look at it from a different point of view. If I bring in original analysis, the one that we have been following. So the dollar came right into this FCP zone, which is also a demand zone, and the market broke out of this trend line here, performed a retest, went up, came back down to create a double bottom, and then started to rise here. Now as usual, most of the media outlets and other people, they are late, they are reporting now because it's breaking out. It has actually broken out already. It broke out in Jan 2021, okay, near about February 2021. So all this time it has just been gathering momentum and it can continue to rise up. So what can we do about this? See, what we have is this W pattern, and this is the 200 moving average, which is near about at 95 area or so. So I'm expecting dollar to continue to rise here up to this 200 moving average. If it finds enough momentum, it will probably continue to go even further higher than that. But this is the first point of call, port of call, 94 and then 95 area, near about that area. Okay, so that's quite possible. Now this may have knock-on effect on other markets, like in a stock market as well, and other markets which are assessed or gauged in dollars, such as GBP, USD, major currency pairs which have USD in them. So if dollar is going to gain the strength, then those currency pairs are going to come down. That's quite an obvious thing. Now the degree of movement can be different, and some of these currency pairs actually do not adhere to dollar movement all the time. They have different variations, different degree of movement. So you cannot say that if the dollar is gaining strength, then Euro USD will fall very hard, or GBP USD will fall very hard. Now they can they have a different degree of momentum or degree of movement as compared to dollar. So this is what we have on higher time frame, and we are just starting the next half of this year. So it is going to be very, very important to have a look and just watch this market for a few days, because a lot of things can actually change, especially when we have bank holiday on Monday in US. So it's possible that the market may actually have a very erratic kind of movement for a couple of days. So make sure that you're not risking too much, and you're following your trading plan. Let me actually show you what we have on 6-month time frame. So on 6-month time frame, the market came right into the mid of the Bollinger Band and started to move up. If you have been following my analysis, this is what I showed a few months ago. Yeah, I think it's at the start of this year that the market was going to come here and ultimately going to start go upwards. Now it is going to probably form, it is probably going to come back down a little bit, and there is another reason for that. We'll come to that in a second. It probably is going to come down a little bit, but on multi-month basis it is continue to go higher. And remember, what we have here is a W pattern, and this is simply simply a sideways movement. That means the dollar can reach into 110 113 area as well if it finds enough momentum on multi-year basis. So this is what we have. You see, right now this moving average and this one, they are just about to get very close to each other, and that can be a very good time to watch, because towards the end of this year there will be a lot of movements happening in dollar, strong movements happening in dollar. So watch out for all the other markets which are dependent on dollar. Okay, so this is what we have on 6 month. Let's go to daily time frame. On daily time frame, what we saw, remember we were discussing that we have a W pattern, and that means the market was going to go down even though we still have this gap left. So dollar is expected to rise there. Let me actually put another thing in there. This is what I mentioned last time as well, but I probably did not point it out. So I think there is a gap here, around here as well, where the entire move started. I think it is 90 level, or no, I think it's around here. I'll have to check and confirm that. If you are in Telegram group, then I'll post a chart there, but I think there is a gap somewhere around there. So at some point in time, dollar is going to fall, as we saw on the higher time frame analysis as well. It is expected to fall and come down to fill that gap up at some point in time, because dollar is one of those markets which does not leave any kind of gap. So this movement has started to fall down, and if you have been able to take short trades on this, or even if you're not trading DXY, if you have been able to use DXY for kind of analysis purpose on other markets, then you must have made some money out of this. So this was a very important level at 92.613. Even though the upper gap is still left, we can expect market to continue to fall down. This is a strong candle move down, and if it starts to go down, then these levels which are available to you on the screen, then they can act as support. They can also act as new levels for new opportunities. If the market starts to go higher, then we are looking at first that this gap will be closed, and then market may continue to go a little bit higher around this level, and then we'll have to reanalyze, because that will be a new structure altogether, and then we'll have to see where the market could be going. Even though, as I mentioned, the dollar is expected to rise higher into 94 to 95 area, but we'll have to see on the lower time frames what could be our potential targets or resistance levels. Okay, so this is what we have on dollar. If you enjoyed this analysis, make sure you hit the like button and share it with other traders, and put in a comment below this video. Okay, let's look at it on Water and Visage. On Water and Visage, this is looking bullish. The blue color is bullish, this is bullish, and that means the market is expected to reach 94. Water and Visage is also predicting that it is going to go to 94.021. So you see that actually lines up with our manual analysis as well. And if I show you the daily time frame, on daily time frame, it came very close to fill that target up at 92.829, but it didn't. Why? Because the W pattern was complete and the market was looking for bearish momentum. At the bottom, we have red color coming in. That means the market is temporarily bearish and it can continue to fall down. Remember, we never had a retest of water curve, so dollar can actually fall down all the way down to 90 level. I think that's where the gap is, and if that happens, then it can fill the gap and start to go up. For now, this is still looking bullish, and the market may fall down to near about this level. 91.197 can be first target if it continues to fall on multi-week basis, and then second target is going to be approximately on the touch of this water curve, which is here. Okay, so that's what we have. This is the W pattern that we're looking at. Okay, then we go to the 4-hour time frame. On 4-hour time frame, we already had sell signal, and that market has been falling. The first target is going to be the touch of water curve, and the second target is going to be near about 91.807. So that is a possibility here on dollar index. Let's go to 1-hour time frame. This was your sell signal. This is the red color. This is the sell signal, and that is the target, the second target here at water curve. So dollar is looking it's looking temporarily weak right now, because it needs to probably go down to fill that gap. But remember, there is a gap at the top as well, so it can actually go back up before it falls down. So you have to treat it that way, and especially when the next half of the year is starting. So there can be a lot of movements, and the there is bank holiday on US, as I said, so you have to be careful with dollar. Okay, so that's what we have on dollar. Let's go and look at S&P 500. Now on S&P 500, the market came right into our level here, which is 4349.9, and I was expecting market to fall down. This was a very strong candle, and I was expecting it to fall down, but it did not. There was a little bit of correction here, and there these sort of corrections have happened before, but I guess there is no point in just going for a huge short positions, like in long-term short positions. You can take these short positions for minor corrections and all that, and these are very good opportunities, very nice opportunities. But don't think the market is going to crash or something like that. Go with the flow. So if the market is showing that it has been violating all the signs of weakness and it has been just going up, go with the flow. Take the if you want to take short, then take the short on small time basis, short-term basis, and then get out. So this was a very good signal that market was going to go down on multi-week, but it did not happen. It decided to rise up, and when it rose, it reached our level of 4349. So as a trader, you should be able to analyze both sides, bear and bull side, so that you can make money on either side. You should be ready to take trade on either side, because irrespective of your bias, market does not care. Market does what it wants to do, and if you're ready, then you can make money on either side. So that's how it should be. So it has reached right there. So what can happen now? If I go to the 4-hour time frame, what we can see, that market is kind of overstretched, which is nothing new in this market. It's very overstretched. Last time when we were here at 4285, there were little signs of weakness, but market turned that level into support. Okay, and then started to go higher. So right now this is looking like a very good candle, where there can be a little bit of movement down. There can be a little, I'm not saying that this can actually create a huge fall or something, but pretty much this sort of candle, a little bit of correction here. So this is quite a possibility that on S&P 500 we can see a little movement downwards. Okay, and if that happens, you can take that trade and then get out. Okay, so that should be good enough. Now let's look at it on Water and Research. So if I come here and look at this on Water and Research, if I go to the weekly time frame, it has been able to reach our profit targets, which was given by Water and Research, and the profit target was 435075. It has been able to reach that, even though it has violated this bearish candle. It has turned into bullish now. So let's see what is there on daily time frame. On daily time frame, it has been able to reach this profit target of 435072. I posted that in the Telegram group as well. And now this is looking like a overextended candle, so there can be a little bit of movement down. So if I go to 4-hour time frame, that's the moment we're talking about. There is a huge sign that another market wants to take a little pause. It may not be a huge pause, but if you're trading, if you're day trading, or if you're taking a small short-term trades, then this should be good enough. If I go to the 1-hour time frame, this is looking like a very good signal, and this is probably going to change into red color. So at the bottom, at the bottom here we have water trend, and if it changes the color to red, then we will have a sign that market wants to go down, and it will probably show you a profit target as well, which is going to be which is going to come once the market has started to show that it wants to go down. Okay, so on S&P 500, I'm looking for little short position, but overall the market momentum is still bullish. Okay, so let's see what happens. Before we actually let this one go, let's look at 6-month time frame. So in last 6 months, the market has been going really high up, and it is now looking like it can actually start to go down because of mean reversion. It can actually start to go down a little bit in the next 6 months. And remember, the dollar is also increasing, right? The DXY is also increasing, which can have knock-on effect on some of these indices. So prepare for any day one of these these little downward movement can turn into big correction as well. So always be ready for that kind of scenario as well. Even if you're bullish, always, it doesn't hurt to look at the bearish side of the things. Okay, so it can actually start to go down. Remember, this was also a very good bearish sign, and it kept on rising even after that. So let's go to the 12-month time frame. 12-month time frame shows that this is kind of like a bearish sign, and after this the next candle was supposed to be a bearish, so we still have 6 months, and in 6 months anything can happen. That's a long time. If this in 6 months it has gone up, in the next 6 months it can come down as well, and more than that as well. So anything is possible in the market. So never trade blindly, always look at the higher time frame, always try to think like what can happen on the other side of the analysis. Okay, so this is what I have on S&P 500. Let me show you where we are standing. Oops. Okay, so this is how it is looking right now on 4-hour time frame. A huge rejection candle is coming, so that means it can start to fall down a little bit, and we can capitalize on that. Okay, now let's go and look at NASDAQ. Okay, on NASDAQ, let me start with 6 month. Again, pretty much like S&P 500, it's very overextended, extremely overextended. This is looking like a 90-degree angle. It is rising up, and now it is not that far away from 15,000. Remember, like just few days or weeks ago we were talking about 14,000. Now it has gone to 15,000. It is probably going to come to 14,800, and then 15,000 level, and pretty much like what we what I just said on S&P 500. It can start to come back down a little bit because of mean reversion. You see this little wick here at the bottom, that was mean reversion. This can also happen again, and if I go to the 12-month time frame, this is again looking very overextended, and it can actually start to take a little bit of dip on 12-month time frame. On monthly time frame, this is looking like the next the maximum it can go to, as of now, as I can see, the maximum it can go up to is 15,676. But you see these two signs, these two rejections which I spoke about a few months ago, these are very good signs that market wanted to go down, but it has been nullified. But in my experience, these signs are never they never go in vain. So there is something happening around here, even though this is looking like going up, and we should stick to the market. Whatever the market is doing, we should just accept that, because the market is always right irrespective of our bias. But you cannot and you must not ignore the signs. So this is not showing me a very good sign, maybe on multi-month basis or multi-week basis. So I'm aware of the fact that at any moment in time this can start to fall down, but for now the market is bullish. So just go with the flow, but have this in mind that it can start to fall down at any moment in time and on any day. Right now, this current candle on weekly is looking very bullish. This is a very strong candle, and this can actually signal going to 14,800 or even 15,000 level as well. There has not been any test of 14,000 level, so it's quite possible that around 14,800 or 15,000 it can start to come back down to retest 14,000 as well. So that is a possibility, and if that happens, we will be able to capitalize on that. Let's bring in the original analysis. So this is what we had so far. Remember, we have been actually monitoring these FCP zones. So around here it took a little bit of pause. Then we said if the market starts to go higher, then the next FCP zone was here. This is exactly where the market took a little bit of pause. Okay, but then there was a strong candle coming out of that, which told us that the market did not want to stay in there or fall down, and it started to go higher. This was the next level, 14,546. This is where it took another pause and then started to go higher. This is the next level that we have, 14,716, and then after that we have 14,815. So these are the levels that we are looking for right now. As we stand here, this may actually revert to the mean. It may go down a little bit for a few hours or maybe a few days, and then because the market is still bullish, then we should be looking for bullish momentum. But this is looking like a good opportunity for a few hours or maybe a couple of days or something like that. So there can be few opportunities lining up here. Let's look at it on what time we search. So NASDAQ is around here. If I go to the weekly time frame, so the market has been able to reach this profit target of 14,650 and this target of 14,490 as well. Now this is looking too much away from the water wave, which means that it should be coming back towards the mean. So that's what I meant. If I go to the daily time frame, Again, this is looking little overextended, and now let's go to the 4-hour time frame. This is showing me a sign of weakness. It can actually fall down to the water wave here just to retest that water wave. So that's what I'm looking for. I'll be looking for short opportunities here. This market has come inside the water wave, and there can be an early sign of weakness here, early sign of sell here on the water trend. If the color changes to red, then there can be a good short opportunity. But always keep in mind, always follow the market. The market is telling that it is bullish, so I'm not going to go for extended profit targets on short opportunities unless the market shows me otherwise. Okay, so this is what we have on the US NASDAQ. If you enjoyed this analysis, found this useful, then make sure to hit the like button and support this channel for free analysis and further videos. Now let's go and look at US30 Dow Jones. Okay, on Dow Jones, what we have is this. Now on Dow Jones, remember in my previous analysis I was mentioning that the market was inside the FCP zone, and that's why I was looking for a short trade, because it's inside the FCP zone. That means there could be potential downward move. Obviously the market had a different kind of idea. It started to fall down. It came right into this 34521 important level, which I marked on the chart, and there was no confirmation below that line. That means we were never able to take a short position here because the market never gave a confirmation and started to rise up. There was a little bit of short movements here and there. There was a lot of consolidation, and in fact some of the traders actually thought that this was a triangle pattern which actually broke through to the upside and started to go upwards. Now, even though this FCP zone has been violated, I'm still expecting there can be a retest of this FCP zone. Because why? Because we are at the previous structure level here, and that means the market can start to fall down. This is a good supply level. The market can start to fall down, and that can give us a little short-term opportunity. And this is the sign of that. This is a strong candle which is telling me that the market can actually fall down a little bit. But remember, we have these indices like the US, there's a bank holiday in US, so that means these actions may be like delayed or nullified, completely nullified as well. So you'll have to watch the market properly next week for a few days when the market opens, and then start to make decisions based on the latest price action. Okay, right now market is closed, and what I'm telling you right now is based on what I see on the charts, but it can change any moment in time. Now let's see on what time we search on US30. Okay, on US30, if I go to the weekly time frame, the market was expected to fall to this level, which is 31903, and this target is still valid. Why? Because we still have the red color here, and this can still fall down to this level. Now on the upper side, let's go to the daily time frame. On the upper side, we have these two targets available. Actually, let me adjust that. Okay, so these two targets are still available, which can market go to. One is 34901, other one is 35035. Now 35,000 is looking like a good number. The market came here once, and it could be reaching that number once again, or may go a little bit higher to create a double top sort of thing, and in that process it can start to fall back down once again. Let's go to the 4-hour time frame. On our 4-hour time frame, this is not very convincing, but if I find a good opportunity to short, I will do that. Otherwise I will stick to the long position, because of 35,000 and these levels these targets which are still open. So I'm open to both sides, like short and long, depending on the confirmation, and I'll look for a confirmation on the smaller time frame. I'll go to the what and research and look at the smaller time frame confirmation. If I see a signal, if I see a red at the bottom, red here, and if I see a signal, I'll take a short and get out because the market is bullish. And if I see a breakout to the upside, and if I see a target there, then I'll take a long. Okay, so that's how I use what and research for confirmation as well. So this is what we had on US30. If you enjoyed this analysis, you know what to do. Okay, so let's look at UK 100. Now I've not been actually looking into UK 100 for quite a while now, so let's see if I already have a previous analysis available to me. Nope. Okay, so let's look at UK100. Now on UK100, if I go to the monthly time frame, remember the 7,000 level which we talked about last time, right? The market was expected to go there, and it did. And then I said, right now, the market could actually take a pause at 7,000 level, perform a retest, and then go back up. Why? Because we had a nice gap left. So let me show you what I mean by that. Okay, so we have a gap left here, and the market came very close to fill that gap up. It is not completely filled, so it can still rise up, but for now we have this W pattern, and that's why the market is falling down. So if I draw Fibonacci from here all the way to this level, this is still not looking like a it has fulfilled its first level, which is going to be the mid of the W. So what I'm looking for is actually a short position here if the market starts to go down. And let's look at it on what envisage. So if it starts to go down, then what kind of opportunity we can have? So UK100. Now depending on what kind of market you're trading, UK100 or FTSE 100, you should always be looking at your broker's data, not my data or anybody, because there can be a little bit of price difference whether you're trading UK100 or FTSE 100. Okay, now we have this open target here at 7,212, so that means the market can actually go back up. Right now at the bottom there is a bullish signal here. Everything looks blue here. That means the market is expected to rise higher, and this is the gap which is available here. There is a gap here on daily time frame. If I go to the weekly time frame, on weekly time frame the market is sideways, and the momentum is bearish. That means on multi-week basis it can actually fall down back to 6,847 level. That's what it is showing right now, but it can change. If I go to the 4-hour time frame, on 4-hour time frame I'm looking for short position as soon as I see a red color at the bottom of this water trend. If I see a red color, and if I see a red here, which is already here, and if I see a signal, then I'll take a little bit of short position for maybe a few hours, or maybe a day or so. Otherwise the market momentum is still bullish, and I'll try to continue going in the same direction. Okay. So this is what we have. On lower time frame it is showing me bullish. Even though there is no signal here at the bottom. So how do you do this? First of all, the first rule is that if you're in doubt, if you are not making sense of in your analysis or anybody's analysis, or if this market is not for you, then get out. You do not have to trade this market. That's first thing. Second thing is, you always try to do the multi-time frame analysis. So you go to the higher time frame, and then you try to analyze, you try to find a bias on higher time frame, and then you go to the lower time frame to execute that analysis to see whether it conforms to the higher time frame trend and bias or not. Okay, so in this case there is a lot of confusion here. If I show you the weekly time frame, it is going sideways, even though this is looking bearish at the bottom, and there is a bull, and this is looking sideways. The color has changed again several times. That means the market is kind of going sideways, which you can already tell. But if it starts to fall down, then it is going to come down to 6,847. So that's what we can see on weekly time frame. However, the market momentum is still bullish. Okay, now let's go to the daily time frame. On daily time frame, market momentum is still bullish. That means weekly and daily are telling that weekly is saying that sideways, daily is telling me go upward. Okay, 4-hour time frame is telling me that it probably can go down. So that means for few hours, that means for few 4-hour slots or maybe a day or so, it can fall down, but ultimately it wants to go up. So that's how you read this. Okay, now if you enjoyed this analysis, you know what to do. Make sure you hit the like button, support this channel for free analysis and free insights into the market, and share it with other traders and trading communities, because that's how we all learn and earn together, right? That's how you express your gratitude and support as well, right? I'll see you in the next one. Have a great trading week next week. Make sure you do not risk too much, and make sure you pay attention to the markets, because the new half year is starting and we have a bank holiday in US. Okay, I'll see you in the next one. Have a good time. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to vikinsa.com, and under training section you'll be able to see core strategy training program On this page, you will be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence training program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to vicinsa.com and under training section, you'll be able to see and submit this form.